Beautiful. Okay. All those information. Anyways, don't worry, I can't go back. Now, so if you look at this, guys, can you see it now? Can you see the reasons? Can you see that these reasons make sense? Now, so what happened? Let me show you what happened. Some of you see what happened now. Let me show you what happened. I think I should use my replay. Let me use the replay bar. Wait, where is the replay? What's wrong with me? Okay, let me use the replay. All right, so the trade was here. Look at it, guys. This trade was here. This was why Nepal guys told you to take a sell. Now let's play. I want to play how it happened on Friday. I want you to focus, okay? So according to technical analysis, we want to be sure about a place of interest. So let's play. The market start moving. See the market moving. Now let me pause. Let me pause. The market came here. Remember, the market has tried to break these points before. It went up. What happened? It went way down, and not just down. It went as low as 1910. Can you imagine? From 1930, 1935, this resistance brought it backward to 1910. See if it's not enough. Okay, for those of you who have watched your video, if you go back to watch your video, the institutional candle, you understand what happened here. Okay, so anytime this kind of thing happens, it will happen again. Okay, so what happened? It went again this time around. For those of you who know, okay, I'll teach you institutional candle a bit of it when we get to Manara. Now, you see, it came here and went down. So the next time it came, what happened? It stopped at that point exactly. What did it do again? It went down to 1915. And you will see something. Let me show you something. When this kind of thing happened, the first one was deeper. It came to around 1910, 1909 area. But what am I saying? It's like 1906 area, right? When it went again, it touched it. This time around 1915 area. You see, that is higher than the former one. Now, so long this kind of thing happens, most times the third time again, it will happen. How will you know? For those of you who have studied candle patterns, you see that whenever a candle touches a particular place and a wick down, this is a wick, this tiny line you see on top of it, wick down the first time, then it tries again, it wicks down the second time, then definitely that place is going to sell. But if it sells this time, is it going to come back to as low as before, what it was before? No, it will come to area where there is liquidity. Guys, it will come to where? What is going on now? Don't replay. Okay, don't worry. Understand. So to come to area where there is what? Liquidity. Remember, this is a liquidity, right? And what is this area? 1921 area. So the guys knew that if it touches, so long there is a wick coming down, and this time around, it may come a bit below it, but this one is short. That is area where there is liquidity, because it may not pass through this area because of this liquidity. After taking money from here, you know why this thing happened? Let me explain to you why it happens this way. Now, if the market is moving upward, and the buy and the sellers are saying, these are the sellers, the resistance are the sellers here. They said, no, this price cannot go beyond this place. They send it back because they have more money, they have more power. So why do you think the market comes back? The market comes back to gather more liquidity from the buyers that are waiting here. They gather their money together, and with that momentum, they go up again to try to break. These guys are still stronger, they send them back again. You see it now. Now, when they come back, this time around, they come to this area. But if you look at all these areas, there are not much liquidity here, as much as it is here. Because anywhere you see a combination, look at all these ones you see here, added to all these ones before. They are on the same spot. Look at this liquidity area, this liquidity area, this liquidity area. You know, now that making 3 times. So when they come back here, you get, it is a must that they come back here to gather more strength. The moment there's a week here, which means this week means they can't pass again. The market says, no, you cannot go again. So normally they're supposed to come to this 21 area to gather liquidity 1, liquidity 2, liquidity 3. And with this one now, they cannot go up. So Nepal guys told you to enter a sell at 1930 because they feel from this 1930 it will come to 1921 to gather liquidity, which will be your take profit. So here you would have taken your profit and be happy. And this from 1930 to 1921, that's like 90 pips. 90 pips, that's a lot. If you are using one lot size, that's $900, right? So they are right. They were right to what they did. But what happened? Let's go back to the play. So what happened? Look at what happened. Now. Oh, no, I'm not selling. Oh, too fast. Let me slow it down to 1. Thank you. You lost in cash, not me. This was the devil. Because I clicked sell by mistake. telling me I lost him. I lost me. All right, let me slow it down. Let me take it back a bit. You see what happened? I want to show you what happened here slowly. So this guy said, oh, when it gets to 1930, guys, you do a sell. Now, were they right? Okay, let's see it. They were right. Look at it. Did he sell or not? At least it sold. It sold. It went up, though. Yes, it went up to. They asked you to enter at 1930, right? Imagine you closed the trade earlier, right? So now let's say you enter at 1930. It went up by 20 pips. So which means you are using a lot size, one lot size. You understand? It will have been minus 200 here. But it now came down and came as low as what? 1929. Which means if you entered at 1930, it came as low as 1929. That is like 100 and something, like what do you call it? That's like 13 pips or thereabouts. Let's say 16 pips. That's like $160 profit. But something now happened. Let's continue. Let's just look at it. Something now happened. And what was that? See? Oh my God. Let's even go back again. What are we even saying? This thing really came down actually. Just that it didn't get to TP. I didn't think they were not waiting for TP. Maybe everybody would have smiled to the bank at that point, right? Let me stop it. Look at it. Came down. It came as low as 1927, which is about 30 pips. Am I right? Yeah, about 30 something pips, which is $300 and something. And I believe some of you that took that trade from 1930, you believe with me that you were in profit as much as this when you entered. But the market now changed because of that sentiment. See what happened? And then it went up, and then it went up, and then it went up. And this guy like, oh, this is too much. So at this time, it has gone up so high. It has gone like, imagine, I think it went to about 14. Let me slow it down and tell you what happened. Why it now chose to like, oh, we have gone too far. We can't go back again. So many of you that were entered at 1930, this thing got to about 1940 something. I think the first buy it called was 1940 something, right? It got to 1940 something as at that time. And if you calculate that pips, that's a lot of pips. From that's like 100 pips already. So if you're using a one lot size, that's $1,000. Now to him, he's like, if he asks you to close in loss, because now see that this thing will not return at this point, he's going to look for the next resistance, a stronger resistance. So you get it now. So it has broken this resistance. So the next one is to look for another resistance in the future that will stop it and send it backward. You get my point now? So he now said, okay, guys, instead of us to close at loss. And now let me tell you what happened. So let's say, let me use mathematics now. I hope I'm not boring you guys. I just want you to understand what happened so you will not be like, it's just a magic or what. So let's use mathematics. Let's say you have minus. Okay, let me use the chart first of all. Let's say you entered at 1930. Okay. Okay. I think this one is stop loss. Can someone remind me? I wasn't there, but this was what I said. I think it is stop loss before in out another sale, right? Who was there on Friday? Anyone? You can unmute. You can unmute and tell me.
Modified stop loss 1945.
Okay. 1941. 1941.6 was stop loss. Okay, ask you to shift your stop loss, right?
Yes.
Okay, now it's stop loss, right? It's stop loss, right?
For some people, it's stop loss. But he later said that they should remove CP because they wanted to hedge.
Okay, good. All right.
They should remove stop loss rather because they wanted to hedge.
Okay, so let's just stick with the ones that remove their stop loss now. So which means you are in a trade now. You started from 1930. The trade is now at 1940. That's like 100 pips, 1,000. You don't want to close 1,000 plus. And you know that this trade may still be going up, but you know it may finally come down. After all this braha, it will still come down, right? So now you have two options. Either to close at loss or you hold the trade till it comes down. But the problem of holding the trade till it comes down is if it keeps going up, you'll be having your minus bigger and bigger and bigger. Now, if you are using a normal account, your own personal account, it can get to a margin call and close your trade and blow your account. If you are using MFF account, it will affect your drawdown. And in order to prevent these two conditions or these two situations, he has to hedge. So let's see, what is the hedging now? Okay, let's go back to the chart and see where he started calling buy. That's where the hedging started from. So, so I think this was Okay, sell. Oh, when the sell limit, okay, got hit. Okay, you're right. So he said modify the SL by 1945.45. Then later I said remove the SL, which means assuming the trade was still on. Okay, so let those who hold the trade please join live session. So on the live session, he told them to put the SL. Okay, he called a buy stop. I think he called that buy stop at 1940 what? At 1956. I remember it was 1950. Okay, yeah. I think set SL entry for buy position at 1950. Okay, I think this was the buy he called. So he called the buy stop at 1950.55. Guys, see what the buy stop is now. Let's look at the chart again so you understand clearly. So let's say you enter the trade at 1930. Now, the moment this thing gets to 1950.55, let me tell you how much loss you would have been in. Okay, let's trace it out. 1950.55. Let me pick a line. Don't worry, let me pick a line. One pick a line. Guys, I just want you to understand everything so you know that, I mean, these guys are just trying to make things better. They didn't do this to make people feel bad, or if you understand trading, it's only people that understand. So when I saw it, I knew it was a good idea, but just that if you don't know how to use it, it may look like it might end up being a bad idea for the person who doesn't know how to use it. 1950.55. Want to see where that is? Let's see. Okay, 1950.55. All right, good. Now look at it. So these guys, what they're saying is this: they have to put the buy stop here because they know that the moment the price gets to this level, meaning it's ready to buy. Why did they think so? Let me go and check the reason. I don't know the reason. I wasn't there, right? But I'll see the reason now. We'll all see the reason together now. If I can see the reason, then you can see the reason. Guys, can you see the reason now? I'm coming to daily. Now, you know why they do that? Remember, I told you that resistance. Remember what I told you about resistance? I hope we're all learning, right? Now, remember, I told you the reason why they took the sell here at 1930. We all saw the reason already. Because of this comes down, right? Now, they now saw that since it has broken this level, the next strong resistance is 1950. Why? Because look at this. It has been stopped. This also has stopped a whole day. A whole day. These are daily. Each candle you see here is one day. One candle here is 1 day. So if a whole day can be stopped by this line, it means this line is strong. You see what happened here? It was on its way up here, and it gets here, and what happened? Sent it way down. You get the point? And also it happened here again. It came up here, and what happened? Sent it way down, which means this line is a big line too. But when I said that, okay, guys, still remain in your sell, still remain in that your sell position, but set a buy stop. What is a buy stop? For those of you who have watched the videos and learned all those things, buy stop is a future buy. Buy stop is a kind of order you make that in case these trades get across a particular point going up, please set buy for me. Okay, so that's like buy stop. You buy it at the top when it has passed a safe place for you to buy. Now, why is it 1955? The moment it gets here and breaks this zone, the moment it breaks this zone that was strong before, this zone is enough to send it straight back. But the moment it breaks this zone, it means your sell position is invalidated, meaning this thing will keep going to the next resistance. Hope you understand. So let me show you something now. So let's see it here. What did they see? So they knew that, oh, this thing normally is supposed to return from here. So I didn't mean return from here. They will tell you to do so. You won't be able to, the buy stop will not activate. It will still be in sell because if it returns from here, this will still go back to 1921, which we're all waiting for, and take your profits, and all of you will be out of the trade happily ever after, isn't it? But then look at this. So the thing broke it. It broke it. It didn't even wait. So breaking it now invalidates sell and activate buy, which they were right. So let's go back to 1 hour. Just hope you're understanding what I'm saying. Like I'm not speaking jargons, right? Okay. So let's go to 1 hour. I wasn't there, right? Now imagine for you to know that Forex speaks to you. You don't need to know what happened before. Just go, if you already know, have the eye of the Forex market, you can just look at the chart and know what happened and why people took the decision they took in the past, right? So now let's go back to the future, to 1 hour again. Leave daily because 1 hour, that's what we see the details. So they put their what? They put the buy stop here. Now, why did they put buy stop here? Let's calculate, before we talk about the buy stop, let's calculate how much loss many people that entered at 1930 must have incurred between this point. So between 1930, 1950, that's 200 pips, my God. That is 200 pips. That's like if you're using a one lot size, that's like a $2,000 minus $2,000 thereabouts. Now, they now tell you, now the guy now said, whatever lot size you have used in the past for your sale, all of them put together, use that same lot size for that buy stop. Do you know why he's saying that? Now, you need an equal strength, because look at it. Let's go to the calculator now. Okay. If you have minus $2,000, what is called hedging? Hedging means bringing an equal balance such that if there's a loss, there's an equal profit to make up for the loss. So if I'm losing 10 naira, at least let me have 10 naira profit here. So I won't be losing, I won't be gaining, but at least it will help me to maintain my account, that it won't go out of order. So he asked us, okay, if you have been using one lot size before and you already have minus 1,000, minus can you hear me? Can you hear me?
Yes,
Yes.
we can hear you, sir.
All right, good. All right, good. So now, so the answer is okay. Use an equal lot size you've used before that made you to lose this, that made you have this minus 2,000. I won't call it a loss, still running, right? Just like you draw down 2,000. So now let's say you've been using one lot size. Now from here, oops, don't do that now. Trading view. Come on, that call changed everything. No problem, guys. No panic. I'm impatient with slow network. And I need something fast, fastest ever. No one will get there. All right, so this takes us back. So I have to do the relay play, the playback or something. The bar replay, so to speak. Bar replay. Come on now. All right, still loading. Is he here now? Okay, all right, here. Where are all the lines I've done before? Taking back. Or should I? Okay, good. Okay. All right, good. It's not that bad. Let me fast it. Okay. Okay. Second time, you see, 1930 had been valid. So the third time was when they expected that, oh, these same points will break down again. And it came down, but just that, you see what happened? No, not that fast. Calm down. Calm down. Calm down. Right. Okay, let's go back to, I think 1955, right? Okay. I still need to go back a bit now. All right, this is where we were. Yeah. Okay. All right. This was over. What want to do now? Okay. All right. Okay. Okay. So now, as I was saying, guys, so this is it. So let's say you've been using one lot size and you have minus 2,000. Remember, from 1930 to 1950 is minus 2,000 in your account. They now ask you to set a buy stop 1950 upward. So let's say you've done that. Now let's see how much you will make and see whether hedging will happen or not if you had followed the instruction. Now let's see what happens. Let's play it out. So you enter the trades now at 1950 and start going up. Start going up. Okay. Look at it going up. 1980 now. All right, let's stop. Okay, stop where? 1988, right? This is the last place, I think. Guys, let's calculate now. Let's calculate together. Now, this is it. So you stop at minus 2,000, for example. Okay. Of course, we are using one lot size like that. So let's say minus 2,000. Now, if you check your sell, now this is where I want to come in, that if we know how to use it, you will really enjoy it. Now let's talk about the sell. The sell now is from 1930 to 88. If you deduct that, that's 500 pips. That is minus 5,000 now. No more. Don't do this to me, please. All right. Okay. So it's now minus 5,000 for the sell, right? Now, what happened to the buy? Let's look at the buy now. From 50 to 88. From 50 to 88. That is 38, right? That is 38, guys, right? So minus 38 now, you have, which means you have minus 5,000. Now you now have plus 3,800. It means you have profit of $3,800 and you have what? Minus of 5,000. Oh, sorry. So you use plus in mathematics. You know, that's minus 5,000 plus 3,008, right? Minus 5,000 because that's loss. That's a drawdown. Plus 3,008 because that's profit. You see, guys? So if you had followed the instruction, your minus 2,000 before will reduce to minus 1,000, even as it goes higher. Please, if you get that, can you put a one in the chat box? If you understand that part of hedging, put a one in the chat box. Now, this was what many people don't understand on that Telegram group. And what they were doing, instead of following the instruction of this man, they were busy castigating. They were not following instruction. Some would not put the SL where they're supposed to put it. Some did not even put this buy stop, and the account kept going up, and many accounts went blown. If you understand what just happened now, put the one in the chat box. If you now go there, you see everybody understands. Imagine now you will say, what if it keeps on going up? Then your account is still safe, because the higher it goes this time around, because you're using the same lot size for a buy that you use for the sell, the more the loss, the more the buy, the constant it remains in terms of balancing your account. Your account will be safe. Now, some will say, okay, what happens when it starts coming down? The lower it comes, the lower your loss, the lower the profit, which is still the same. So what happens when you eat stop loss, when you buy eat stop loss? Then it takes you back to when your account was minus 800, then minus 500, then minus 200, then minus 100, then minus 50, then plus 100, plus 200, back to profit. Please let your account be alive till you see victory, because most accounts will have blown before the victory will come. To prevent that, that is why they use hedging. Hedging is to prevent you from trouble, not a strategy to use to trade. It is stupid to use it to trade, but it is only used to exit yourself from situations like this. Now, that is what they ask you to do. But this is on my part. Because I asked the question then, if some of you remember on the broadcast, how many of you are still in this trade? I wanted to know so I can guide you. And I wish one of you, let me see, Elijah from Canada, whether she's online. I think she messaged me. She said she's still in the trade. And I guide her. I was guiding her. And guess what? It's worked out. So what did we do? Now, let me tell you my own strategy. If I were to, let's say I knew some of you that were in the trade and we're communicating together, I'll be giving instruction on the broadcast. Let me tell you what I did for her. So what I did was, another style that you can have to even increase your stake, to even put you in a safer zone, is this. Now, as this buy goes up, now, okay, it's not even there. Let me even stop there and go to where the second instruction he gave. We're not even done. Sorry, we're not even done. This guy did a very good job. If you had followed the instruction, remember he now said when the trade started going up. Let's look at the charts. So it won't be like what he said, what he didn't say. He now said again, new buy stop. Guys, how many of you saw this instruction? How many of you followed it? He said new buy stop, which means put another buy stop again at 1956, added to the one you have before. You get my point? Added to the one you have before. Remember, you have one lot size against one lot size win against one lot size loss. Which one was giving you minus 5,000 and the other was giving you plus 3,800. That said, add another one at 1956. So what does that mean? So which means at this point, you have from 56 to 88. Can you do the math? What do you have? 56 to 88. That is 32. That means if you had followed this guy's instruction, let me tell you what would have happened. You would have had plus 32, which means you will have been in profit of $2,000. You will not be in minus anymore if you had done what he said again. So you would have had to buy positions, and now, presently now, your account will have been floating at extra profit of 2,000. So you're out of risk. Now, right now, if you follow that instruction, every one of you, if you follow this guy's instruction, at this point that we are now, that the market is now, you should be in profit of $2,000. So you know what that means? That means you'll be seeing red of minus 5,000. You'll be seeing another plus 3,800, another plus of 3,200. Come on, guys. I thought I was making sense enough for anybody not to unmute and talk. I mean, if you're muting to contribute or you're asking questions to get clarity, right? If you get what I just explained to you, oh my God. I need the co-host. Let me quickly make who can volunteer? Who's the co-host? I won't be having to come in down here. I'll make you a co-host so you can mute and unmute people. Who is ready? Please, who can volunteer? Just show me your hand, please. Please, I need someone so we can be fast because I want to finish this. I'm supposed to have done. I'm not even got to Manara. All right, make you a co-host. So please, anybody who is on mute now, if they are muted to talk about what we are doing, fine. But if it is something else without knowing, maybe background, please mute them again. Guys, hope you understand. What I'm doing right now, I'm telling you that this academy know what they are doing. When you follow instruction, don't do what's on your mind. See, this is how I do my thing. You know, I always tell you guys on the broadcast, I said the secret to success is instructions plus trust. You have to trust your coach. Even if at the end of the day it's not a win, you will know that you have done your part because your coach knows what he's doing. He's the one that did the setup. Even me, despite that, I know trade, I know this Forex. You all know, at least you know that I know Forex, and I send trades to you. I can, okay, look at what I'm doing now. I'm analyzing exactly. I wasn't there, but I can see what they did. Even me, I still trust them. I forget what I know. Whatever I tell you, I do because it's the owner of the setup. I wasn't the one that did the setup. And I'm not going to be second guessing the setup by trying to check with my own knowledge. I can only see, okay, when do I enter? I trust them. You need to trust them. If you trust them, you'll be fine. Like I've proven to you now, if you have done what they ask you to do, even from 1930, you will be in profit right now. At least with that, I've been able to convince you, right? Now, today is Monday. For those of you who are in this trade, what is the next thing for you? The next thing for you is the next thing I want to talk about now. So if I were you, especially those of you with MFF, what I'll be doing, let's say you are using one lot size and your account size, let's say your account is $50,000. You know, your daily drawdown is 2.5, your limit is 2.5, and you have minus 5,000. And now, if you had followed this instruction, you will be floating profit of 2,000. But that minus, you want to reduce the sell and help yourself to reduce the sell. So what you will do, you can close at least out of that one lot size that gives you minus 5,000, you can close maybe 0.1 will give you 500, 0.2 will give you 1,000, 0.3 will give you 1,005. So you can close 0.3 from the sell. So you know how to do partial close, right? Partial loss. You click close to take you to the dialog box. You reduce that one lot size to 0.3. So if you take 0.3 out of the what's it called, which will give you 1,000, we remove 1.5 from the 5,000, and we reduce the lot size of the sell to 0.7. Why your lot size for buy is what? 2 lot size. You have overpowered yourself. You have overpowered that area. Now, how do you now save your account? You will now close one of the buy to add to your profits. So when you close the remaining of the maybe when you close another 1,000 from the remaining 3,500, it won't affect your daily drawdown because you have increased it by 3,002 or 3,008. Then now close 1,000 plus. Gradually, you'll be moving yourself into pie, and you'll be having all blue without having red. But that's for those who follow instructions. So on this one now, if you need more guidelines or guidance or explanation, if you're really still in this trade, sorry, you get to me privately, send me a screenshot. Let me see, because it's a relative thing, depending on your size of account, your minus and your plus. That will determine what advice I'll give. I think at that point, I want to move on. So if you have a question, let me welcome at least 1 or 2 questions before we move to the other things. Any question? Okay, the answers are no question. Okay.
Yes, coach, I have a question.
All right, please go ahead, one after the other.
Okay. Looking at the market from last week. Sorry, I'm taking us back. You know that this whole thing started since last week.
Yes.
And it just like flew up like that.
Mm-hmm.
And it has started. So is it the same thing? Because I remember that Powell gave a speech.
Yes.
And since he gave a speech, the market has scattered.
Yes.
And you know it's been buying since. And the VBS now came up. Yes, the bank crash now came up and it also escalated it. So is it the same thing that happened to the bank that happened to Powell's speech?
Actually, Powell's speech was about
how did that speech affect the market?
No. So the speech of Powell, you know, Powell anything that has to do with American economy, whatever he says or predicts, people quickly react to it. His voice is like the voice of mini gods when it comes to finances, because he's good at it. It's like the economic advisor to the United States government, right? So now, if this guy tells you that there is a fear that the United States dollar is going to crash soon, why? Because the number of employment, the number of labor, the insurance, the RRS, this, and after all his calculation and all these needs, the moment he finished that announcement, most people will panic. They want to save their, now if the dollar value, just like Nigeria now, let's say Powell is in Nigeria, if he tells you that Naira is going to crash, like Naira is going to be like equal to $1,000 soon. I'm sorry, 1,000 Naira will be equal to $1 soon. What would you think people would do? Right now, let's say the dollar is still $1 is still equal to like 700. And you know that in the next 2 weeks from now, dollar is going to go to 1,000 Naira. What will you do? You have all your Naira, you want to use it to buy dollars, isn't it? And when you sell your Naira to buy dollars, what happens to Naira? It gets weaker, isn't it? Do you get my point? Dami, are you there? You need to let me know. Is Dami there? Can anybody hear me?
I'm here. Yes, I understand you.
Respond. So now, let's not talk about gold and dollar. So, Powell, what he released about U.S. economy was going to affect dollar negatively. Okay? So, most of the dollar investors, banks, company, hedge funds, have their liquidity in dollars, they change it to gold. So, U.S. and Great British, UK, United Kingdom and U.S., mostly they invest in gold when the currency is about to crash. They quickly push their money to gold to hold the value. So that panic of that Powell statement made people started buying gold. Now, you know what happens when you buy gold? It becomes stronger, it keeps buying. Dollar gets weaker. That was the first statement. And unfortunately, the Bank of the Silicon Valley, so now they should probably, as a result of this inflation issue that came as a result of the announcement and analysis of Powell. So they had issues that they had to go bankrupt. You understand? And what happened? That increases the fear of the people in the country to start pushing all their money into gold. So that pushing is what keeps gold flying. Now, the question is, when will this stop? We don't know. But one thing we know is this: when it's going to stop, it won't just stop. It will stop at a resistance, technical. That's the technical will come in. because all these things will still correct itself. You see the way it's new? It's the same way it's going to rush down like place, because this was sentiment. You know, I told you about 3 areas where things happen, right? Fundamental, which is news. Technical, which is what we are looking at, price action, support and resistance, IC candle, all that, which is the major of the market. Then fundamental, which is the news, while sentimental, which is what is happening, like fear of people missing out, or fear of greed, or fear of, or crash. You understand? So the fear is what is going on. You know, fear is not real. It will only last for a while. As soon as people start realizing that, oh, these people are bouncing back, what happens? There's what we call correction in the market. And when there's a correction, it won't move normal. It will move the same way it moved up, it will rush down, and then I start going in the direction it's supposed to go, whether it's up or down. It will not go technically. So back to technical analysis. Tammy, do you understand my explanation?
Yes, I do.
Okay, now, so if you listen to Nepal, they said something. They said this market may crash, may start coming down. The reason why they said you should hold your trade on Monday is it may stop flying from 2000 or from 1990. So why did they say that? Let's all look at it together. Why do they think so? This is daily. We're back to daily. If you look at this daily now, there's what we call in Forex. You don't take your trade. You don't enter a trade. Neither do you go out of trade when it's not at a key level. You only enter a trade and you go out of a trade at key levels. What are key levels? Levels where in the past market has returned or went up. You understand? Let me show you now. If you look at this past now, these are past. These are which April, March. Look at March last year. Okay, so let's look at them together. These are major areas. I will still teach one of these days, though these things are in the academy, but I'll just help because I don't want to teach it because I want people to really know how to go and be watching videos. Or maybe I'll just teach support and resistance one of these days, like basic forex. After that, I will refer you straight to that video. Now look at here. This place, do you know why I'm putting my line here? That is a major area. Look at this place. Let me show you. It's a major area because in the past, market, okay, market came here. You see, week down, started dropping hard. You see it now? That makes it point of interest. And where is that area now? 1987, right? So the closest area, but if you want to check this kind of thing, you always check the recent one. Now, why are they suspecting that market will stop at 1999? Because this is the recent one. Look at it. So the market got here and started coming down. This is 1998, right? This is 2010. That's $2,010. Gold go to this point. So look at it here. So look at one here. Got here, came down. Got here, came down. Got here, came down. There's a point it got here, came down. So all these areas are areas of interest. So they're not saying that the next area gold will get to. The reason why you should remain in that buy stop is it may get here now, which is what? 1966 and start dropping. You know, they mentioned 1966, right? But it has passed 1966 already. So now that it has passed 1966, you may get to 90, it's already at 1988 now, which is the point of interest. So guys, this Monday, this market may drop. But if you pass this 98 again, what is the next area? This area, 1999. Do you see it now? You understand? The moment it breaks that area, the next area, then if you break this area, it will be 2069 or 2000, let's say it will be here, sorry, 2058. Do you get my point, guys? So these are they know the next. So they know that in between all these ones. But the question now is, should you not let your trade, should you not lose all these opportunities? No. If you are done what they ask you to do, which I believe they will still set another buy stop. If this thing breaks this area now, I believe on Monday, this Monday now, they will set another buy stop, which is making it 3 positions for the buy. If the buy will go up, you will now have enough to edge against your loss. No matter how far the sell goes, the buy will like times 3 of it, which means you already gained the market. And you'll be in very huge profits. You understand? You'll be very huge profit. I was in minus 2000. 3 minus 1,000 plus, I think minus 800. 3 position for sell. Then my first buy stop was in minus 5,000. Second one was minus 7,000 or thereabout. I was having floating of profit of plus 5,000 plus. Can you imagine that? So imagine I had another position and it keeps going up like this. Enough money. So it can turn and start correcting itself. But when you want to do that, to do it at the technical point of view, like either at this resistance or at this resistance. Why? Because market has stopped in these areas in the past. You get. So those will be the new area for me. All right. Any other question? Daniel, I hope I've satisfied your question, right?
Yes, thank you very much.
Yeah, Diamond. I hope we'll be able to do one. All right, go ahead, Diamond.
Okay. Anyway, my own question is now, if the market is using either sell or buy the direction, so does it mean that the account is faster?
The line is not clear. I can't hear you clearly. Can you adjust your mic?
Can you hear me now?
Okay, yes.
Hello, sir.
Better. Yes, better now. Better.
Hello?
Yes,
Can
better.
you hear me
Better. Yes, better like this. Yes.
Okay. Okay, what I'm asking is this now. If a market is going on a particular direction, either buy or sell, does it mean that there can be a reversal? Hence, it has not gotten to a particular support or resistance. That's number one.
Yes.
Okay, so it must get a particular support or resistance before it may start to reverse.
Yes, market reacts only at key levels. What are key levels? Major support, major resistance level. Major support level, major resistance level.
Okay, that is. You were saying that we are supposed to have 2 buy stops as never. Yes. Because some people read through the chart, so that is the information they will get. But if you were in the live session when the first buy stop was activated, you will notice that there was a stop loss, which the buy stop, nobody removed it. It hit stop loss. It was communicated to.
Okay.
So yes, so nobody removed it.
Let me explain that. See, the first thing that was called was 1930. Now, when I came in, I didn't even know Nepal was trading a trade. For those of you who remember, it was my own setup that I quickly came in with, that I sent a sell now at 1950 or so. And it got to 1945, which I said TP1 smashed. That was when I now realized that when I saw that people were not responding, like, what happened? And I checked that, they were all on Nepal trade. So when I would join Nepal, I joined Nepal for a sell at 1945. It went down a bit in profit, then it started moving up at that point. Now, at that point, he told you guys to enter a buy stop. Now, that buy stop was up to 50. He said at 1950, you should enter another sell. So somebody was now asking, now what about the SL for the buy stop, which it has already been activated? He said, if this thing is going to go down, the buy stop will not matter anymore. I mean, they should let it eat SL, which a lot of people eat SL on that. And then started going down. That was when the one I showed you that it sold like 30 pips, even further. That was when that thing happened. So it was in profit. People didn't mind anymore. But then this thing happened again all of a sudden. When it happened again, that was when it now sent the first buy stop, 1950. That's the second buy stop now, 1950.56. The third buy stop, 1956. So it was 3 buy stops. The first one was the one that hit SL. But people are already angry that, okay, why would you tell us to do this? And now I saw the comments. People were saying, yeah, you see, he asked us to put this, he hit SL. Why they were complaining? The guy gave another instruction they didn't follow. You get my point now. It was 3. There was one that came around 1940 something. That hit SL. The second one was 1950. 50 dot something. Then 1956 is the last one. It was the last one. Yeah. So what I'm saying is this: when you are with Nepal, ignore those nonsense people. Most of you, I see you, some of you, you respond, you listen to all those people that don't know anything. Those people, if they know something, they won't be on this academy. By now, they should be making so much money. But they will be there, and they don't. I'm telling you from the point of my, see, I'm a Forex, I know Forex. Not mouth, I know Forex. Yet I listen, I learn from those guys like I know nothing. That's how to learn. Now, all those people, when they complain, they don't know anything. Some of you that have noticed, there are many times I've said on that group that this thing will happen, they should trust Nepal, and I will explain how it will happen, and it will always happen, and I will even send the chats there. But those idiots like to complain. They don't know anything, they'll complain. Hey, should have done this, they should have done that, but they cannot do it. Why did they do it? But most of you get carried away by those comments. And luckily, I think they've listened to our complaint now. The complaint I've been making is they should shut down that chat section because it prevents you from seeing a real thing. When these guys will not send their own instructions, you won't see it because all these hula balloons have been making noise. You see 1,000 chats, you won't know which one to follow. So I think they've done that. One of the Nepal group, they've sealed that comment section now. So you only see their own chats. So I've told you, if you are in my team, listen to me. And not push you to the wrong direction. And I know this stuff, no be mouth. I really know this. And when I tell you, listen, follow this guy, follow them. I follow them myself. I follow them because I see some of you listening to those people asking questions, doubting. I don't doubt. If you are entering a plane, you are taking a flight, you don't even know the pilot, yet you trust your life in the hand of the pilot, flying how many hours to the trip. So if there's a turbulence, do you say, oh, give me a parachute, I want to go out? Because there will be turbulence. There will be turbulence. That doesn't mean he doesn't know how to drive or he doesn't know how to fly. It's just that the weather, there's a particular point. For those of you who have been to Asia, you know that you must cross the Red Sea. There will be issue. Knowing all these things is like going into trade, knowing that no matter how good you are, there is room for lessons. But all we are looking for is having a winning rate of 80%. You guys know that these guys, they do 100% winning rate in a week without losing. People will shout, hey, so when there's loss, come on, take it. And then wait for recovery. There's always recovery. But when people still complain about the losses, the recovery will come, they won't be part of it, they will miss everything. Okay. So I think we're done with this one, right? Right? Diamond, are you okay? Are you okay, Diamond? Sharp. So we can quickly show you. All right.
I'm okay. So the only point is that they are risk to reward ratio
is what?
Kind of, so, but I think if there is something they should work on, let them work on their risk reward ratio.
No,
so that,
no,
it will help a lot.
No. I've told you something in Forex. Look at this chart. I want you all to look at this chart. You must know this today, even if you don't know this before. I want to show you something right now. Let me tell you what they call validation and invalidation. What validation means? Was someone saying this setup, is it valid or not? I want to show you something. Let's say I want to trade now, guys. I want to trade. Okay. Let me go back. You must learn this today. Let me go back. Let's say, okay. Let's say I'm going here, guys. Okay. Let's say I want to trade this area now. Let's trade this. What date is this? This is Thursday, 2nd February 2023. This candle, let's say today is 3rd of February. So this was yesterday's candle, right? I want to trade, right? Now, what do I do? How do I trade? First of all, I want to check that. Let me remove all this line. I want you all to pay attention. So you know that stop loss is not falling from heaven. It's based on what is there. It's not their fault. Stop loss simply means validation. Stop loss is telling you that if this trade passes this level, meaning this trade is not valid anymore. So if the validation is around here, they won't go and put it here because you don't want 100 pips stop loss or risk to reward ratio. You get? It's you now that you now do your risk management. So look at this trade now. I want to take this trade. What's the first thing I will do? In case of those of you that are new, you may not understand, but I will try as much as possible. First thing I want to know, in the previous day, what was the highest level this market got resistance? I want to know what was the lowest level it got support. Let me make that name. That's the first thing I want to know. As at yesterday, what was the highest, what was the level, what was the lowest? And what color is this candle? Red. What does red mean? Sell, which means the candle is a downtrend. So if I'm going to trade this now, what am I going to do? Using for those of you who don't know Fibonacci retracement, this is it. My Fibonacci retracement is going for a sell because the previous day was a sell. So I want to know what will happen today. But for me to know what will happen today, I will use yesterday's market. Now, because it's a sell, it's a red candle, it's a thick, big red candle. So I'm going to do my Fibonacci for a sell. And how to do that is you draw the Fibonacci from the top to the bottom. And why am I doing this? I want to know where the market will start from this time around. What will happen to the market? Because I'm expecting the market to go down. But from where will it go down now? On what key level? Now Fibonacci has settings. This settings is a setting that many of you should have. And if you want to do that, I will show you all these things and things I will show you. I think the videos are there. I even watch it from those guys. They have the video also, but this is how it's done. So I'll use a Fibonacci tool. But now when it comes to gold, okay, my focus on this Fibonacci is not all this number. If you can see, we have 88%, we have 38%, we have 68, 50, like all this percentage are part of the setting. For me, I'm focused. So when you are trading with Fibonacci, okay, especially with gold, this golden area is what you focus on. These three ones that are together. So my focus is on these three lines. Look at this: 61.8, 50%, 38.2. That's my focus. Those are area for reversal. Okay, those are area for retest. Now I know for those of you who don't know break and retest, I'll teach it like maybe from next week or from this week. We may start something about that. Okay, so don't worry about these details. I just want to show you diamond something. Now look at me now. I've put my golden zone here. I'll delete this. I don't need it anymore because I already have what I want. So this is a daily. Now with a daily, I can't know what is going on. I have to go to a smaller time frame to know what is going on. This is just one day. This can't be showing one day. I want to see hourly. Know when I'll come in now. So this is a new day. This is a new day. No problem. And this is a new. Oh shit! Made a mistake. I've closed my. Oh God! I closed that bar replay. Sorry, by mistake. Because you know. Okay, let me go back. Don't worry. Sorry about it. It's still there. Sir. Thank God. Let me go back. I need a bar replay. Bar replay. Okay, this is where we are going now. Cool. Sorry guys, don't worry. Still there. Thank God I have this. Aha. So let's go to 1 hour. Okay, this is 1 hour. Guys, look at what is happening now. Now, Diamond, I hope you are here. Are you listening?
Yes, I'm listening, sir.
Now, remember, I told you that the previous day candle determines your direction for the new day. So my Fibonacci now, I use it from top down to down. That's from the top to the bottom, because I'm targeting to sell because of my previous day candle. This is still previous day candle. This previous day candle broken into 1 hour. So 24 candles now make 1 day. Okay. Now the last candle was this one. So remember, we are selling, right? And this thing is already at the support, which is the green line. This green line you are seeing here. Now you can't sell from here. You sell from the top. You don't sell from down. Same thing, if you are buying, you buy from the bottom, you don't buy from the top. So now, my target will be golden zone. This rectangle, I said from here to here. So my first aim is, I'm expecting this market to go up. So for those of you who take my signal, you see when I say buy gold now, let's say the first day I say buy gold now, I'm waiting for the gold to get to this support. The moment I see this week, I know that I cannot break this support. You need to come and touch this place to gather power, be able to break down because we are selling. So either if I don't want to go against the trend, I won't call buy for you. But I know it's going to buy now because it has to come here before coming down to break this green. It has to come here. Let me show you what I mean. Let me show you what I mean here. Okay. So it has to come here first before coming down. That's what they call break and retest. Break and retest means it comes here, it needs to break here now to come down, but it cannot break because this place is strong. That's why you see this tiny candle. Instead of it, it was big before. Look at it becoming smaller. Anytime you see the candle becoming smaller, it means it's about to go. It cannot pass that area. So the moment I see this sign, I know that this thing is about to buy. That's when you tell me, you see, these are the signs I wait for. That's why sometimes it's too fast for you to catch up and say, guys, buy gold now because it's about to sell or to buy. Okay, so I expect you to come to this area or anywhere in this zone before coming down. For me now, I will be waiting for the gold to come and touch here, okay, for us to come down. Now, but what happens? The moment this gold there pass this area, this is the zone I'm looking for. The moment it passes this area now, do you know what that means? It means the trend has changed, it's going up. Because this is the only area that validates itself. The moment it passes here, that's it, is invalidated. So my stop loss is area where the trade is no more good for sell. It has already changed to buy. Because if I don't put a stop loss, we will lose a lot of money because it's already going up. So invalidation means a point where it gets to that the setup is now useless. It's not going down again. So if this candle goes up here and this stop here, it don't stop here, it doesn't stop here, and it's not finally stop here, now broke this place and closes above it, is invalidated. So what will I put my stop loss? I want to put it somewhere here. I'll put it at this place. At the moment the candle break this one and close it, then this trade is no more. So look at it now. If I tell you guys you are entering the trade at 1927, at 1929, the stop loss is 47. Calculate how many pips. That's a lot. That's like 27, 29 to 47. That's like almost like 200 pips, right? That's 200 pips. But the truth is, this is where it will happen for invalidation, or somewhere around here, or somewhere around here. Either way, is far from your entry. So, hope you get my point, right? So now, we as traders sometimes, in order to make it shorter a bit, because gold is very volatile. I didn't mean it's currency now. That one you can just choose any, but gold move very fast. It can quickly come here, okay? And the reason why we put the stop loss here is this. Sometimes it will come here. If you put your stop loss close, it will take you out and then I'll go your way, wasting your money. So why don't you give a gap? So when it goes here, when it comes here, comes here, comes here, so long it didn't go out of this place, it now start falling and you back to profit. So we don't just set stop loss, we set it for a reason. So let's look at this trade now. Let's look at what happened. Let's see how it play out. Let's see. Now look at it. You see now, it even broke this place. So which means even if I've done this, even if I've done, let's continue. Even if I put my entry here, this trade would have probably left us and gave enough money here. You see what I'm saying now? So imagine your entry here now. Your stop loss will be here. And you complain that Nepal stop loss is very far. You see now? Now, but do you think we will miss this trade? No, we will not miss it. Do you know why we will not miss this trade? Because we don't give go ahead until we see confirmation. And what is the confirmation? I will show you the confirmation and let me show you what we do. We go to a lower time frame, 5 minutes. I didn't want to use 5 minutes because of the point. I'm trying to explain itself for you. So we go to a lower time frame, 5 minutes. That 5 minutes will show details. Let me show you something. Let me go to 1 hour and show you something. Then I'll now go to 5 minutes. I'll show you something on 1 hour, then I'll not show you 5 minutes. See why we go to all this lower time frame. Because if we go to lower time frame, we'll never miss this trade. We will enter it and we'll enjoy this money. Okay? So look at it now. This is 1 hour, right? Let me circle a particular spot for you. Let me go back before this. Let me go back. So we want to know where we will take this trade from, right? Now, we don't take trades on 1 hour. We take it from 15 minutes, like Nepal, they use 15 minutes, but me, I prefer 5 minutes for my own type of trades. Scalping, they use 15 minutes, which is not bad. I mean, I'm saying that different people, right? Me, I like to use 5 minutes because I scalp, right? So let me show you something. Let's learn something here. Okay, let me use circle. Let me circle this candle. So guys, look at this candle. This candles here, right? Now let's go to 5 minutes and see them. Now see those small candles that you saw before. Look at plenty. Can you see how many candles are there? So because how many 5 minutes do we have in what's it called? 5 minutes we have in 1 hour. You get that's like 12, right? So now all these candles. So when I come to 5 minutes, I'll be waiting for a what's it called? I'm waiting for a bullish engulfing candle. You understand? Before I'll take the trade. So I'm expecting this trade to come up, okay, to come up before coming down, or I want to know when it will break this place so I can enter, because I can't enter the trades without being sure that it's going to break this place. You get my point, guys? You know, this is the problem, right? So you will now wait. So let's play now and see what will happen. You know when to enter this trade. When you see a bullish candle coming down, a very strong bullish engulfing coming down, though even if you enter from here, okay, you only be having minus ahead. Look at it now. And you see the bullish engulfing candle. And you see the bullish engulfing candle. So from here now, we'll be suspected that, oh, we're going to take a sell soon. But we want it to be closer to the line and give us that kind of what's it called again? If you want to do, they call it sniper trade. The lower the time frame, the more closer and what do you call it? The more prompt the entry will be. So you don't have to suffer minus before you start making money. So you see, all this is consolidation. We are waiting to see where it will break and be closer to this line. This line is our target. This line, this green line. Okay, and this is it. So this is why you see, now this is why you see, I will say buy now. Buy now, because now we see a sign. It broke it, it went up. You see, broke it, it went up. So now you say buy now. Now when you are in deal now, it will give you profit, put it to minus, give you profit, put it minus. But you know, you at least you are sure now. Do you know why I'm sure again? Let me tell you, this is why I'm sure. Look at these two things you see here. This blue line and red line, they call them EMA. And for those of you who have done binary with me, when I was trading binary that time, remember when the market is below the EMA, what happened? What do you do? Someone can admit and tell me. But the market is below the EMA, but you want to take our binary. Do we sell or buy? Is it confirmation for sell or buy? Is there anyone here? No one here did the binary with me that time when we were in IM.
We buy.
Am I speaking? When it's below the EMA, what do you do? When it's below the EMA,
buy.
What are you talking about? The EMA. When it's below the EMA, you sell. When it's above the EMA, you buy. RSI, you are mistaking RSI for EMA. EMA, the super trade EMA, you buy, you sell when it's below the EMA. When it's above the EMA, you buy. But when it's stochastic and RSI is the one that you sell when it's closer to the last place. You buy when it's down, and you sell when it's up. But when it's EMA, go and check your notes. All of you are forgotten. Because this EMA is telling you when the market is stronger above and it's stronger below. So when you see below, sell. You get? You sell. When you see below it, you sell. When you see above it, you buy. Okay? So this EMA is telling you that. Then also the what's it called? The candle pattern also is telling you the same thing. And then that to come into the trade. So now those who come into the trade now already, they will be in profit. Those who come in after this retest, look at this retest now. For me, this is where I like to come in. The moment it breaks and come to retest, like after this red candle, and then after this red candle, it breaks it, and then it comes to close below this line, and then come up again for a retest. I take it from here. When you take it from here, most times, 90% of the time, gives you what you're looking for, which is what? Which is to sell or buy. So here now, you'll be thinking of all the pips you can catch. Just calculate all the pips you can catch and all that. So for diamond now, talking about the stop loss, imagine I enter this trade and I put my stop loss around this area. You understand? Now look at it. If I enter this trade at this point, 1911, imagine I put my stop loss at 1914, which is Imagine I put it at this place. It will have taken me out. But the question is it going to go down after that? Look at it going down after that. Look at it. See where it goes. Can you see it now? Won't you be crying? Imagine me coming here to take you out and now go this way. That's why we set our stop loss far away, because gold is stupid, as in volatile. It's crazy. You get? Do you hope you are getting my point?
Yes,
look at it.
Yes,
Since 1916 to 1910, 60 pips. Just 60 pips. So meaning if I put my stop loss at 60 pips, they are taking me out. But if I put it at far away, like Nepal, they put it far away, like 70, 80, 100 pips, you will make money. Look at money. Look at it going down. Can you see how many pips too? So these are kind of that happen. You now be crying and say, oh, this thing took me out and went this far. Look at how low it went. So that's how they do what they do. Please, to understand them, okay? So how do you now overcome it? So you won't lose money. That takes you back to, I think we'll do Manara tomorrow, guys. Okay? And this one is important. So it prepares you for Nepal today. Okay? Don't worry, I'll give you my own signal as well, which will help out. All right, so we'll do Manara and my signal. Now, that brings us to our calculator. How do you do it, guys? Since we now know that Nepal, so first of all, let's go to Nepal. Let's go to Nepal. So this is what you'll be doing henceforth to avoid all this emotional roller coaster, okay? What you do is, so Nepal give a trade idea to you. Let's go to the trade idea, the first trade idea now. Okay, now look at it, it said sell good at 1930. What is this SL? SL 1921. How many pips is that? That's like 101 pips. 101 pips. So what do you do? 101 pips. What do you do? You come to your position size. Somebody should give me an account size. Give me an account size. Give me an account size, sharp.
50,000.
50,000, okay? So account size 50,000. You want to risk 1%. Fine. And your 1% is $500. Sorry, no, sorry. You want to risk 1%. Now, Nepal has given that trade. That trade is telling you 101 pip stop loss. That means 1,000. You know, you have to add 1 more zero when it comes to gold. These are the actual pips, right? But in calculation, you add 1 more zero to make it 1,010. Anything they give you, if they give you 50 pips, you lose 500. Okay, so this 1,010 actually means 101 pips. Okay, so look at it now. Whatever it gives you here, the result here is what you use. 0.4 is your standard lot. You know what it means? That means that when you say this is your lot size, 0.495. Okay, now worst case scenario for me, if I'm the one who, I'll look at this sell limits. I only choose one. Okay, I only choose one. I'll tell you how I do mine. So if I were you, 0.49 is like 0.5. So what you do is you divide your 0.5 into 2. Divide it into 2. Okay, so you have 0.25, 0.25. Use 0.25 at the cell now. Use 0.25 at the second cell limit. Now, if you now get to the first cell limit, if you now get to the second cell limit, that's that. Oh, you can use 0.1 addition. So what happens? Which means your account, instead of using 1%, maybe you're now using 1.05, which is not bad. It's still far away from the drawdown. Do you get my point now? You see that no matter how far it goes, no matter how far the stop loss, it won't affect you because you are still within your 1%. Hope you understand what I'm saying. Do you understand? Guys,
Yes,
do you
coach.
understand? All right, so guys, we'll do another episode tomorrow because of the time. You know, we have some of us that are, their time zone is different. Like Tanzania, I think they're already around 11:50 to 12. So, you know, and very soon the market will open also. You have to prepare yourself. So we'll do the Mandara tomorrow because of time. You can ask questions now before we call it to a close. At exactly 10 o'clock, we'll draw the curtain. Question. Ask me questions now. Remember, some of you that like to ask questions on Telegram, you know, there are too many people answering, and those guys are too tired to answer questions. I mean, they have 2,000 people to manage, and they're concentrating on the trade ideas to give you good profits. So ask your questions. There's no question you want to ask them that I cannot answer. Okay, I will send it to you. All right, Princess, you can go ahead.
Good evening, Coach.
Yeah, you're welcome. Good evening.
So I wanted to ask regarding this Nepal. So I was busy. So when I came in, I just took in one of the trades, but I didn't see all the buy stop and all that. Is it wise to enter those Nepal trades as I'm busy? Because I'm using, yes, small lot size, but it really affected because I didn't see the buy stop. Is it wise to still take the trades?
Yeah, it is wise only if the trades, only if what's it called, is still around the zone they ask you to enter. You see, one thing I like to tell people is this: if now when I say around the zone, so let's say they tell you enter a trade at 1930, and you are a busy person, and maybe you just stumble upon the Telegram, just open and they're like, oh wow, there's a sale going on. You quickly check gold, you go to your MT4, MT5, you check, you see that the price is still 1930 or above, which is the higher the better, right? So you enter. If it's a sell, the higher the better. If it's a buy, the lower the better. So anything around that price, 1930 and upward, you can still sell. But if it has left and it's already 19, like 10 pips away, you know it's 1929, I don't do it. Because maybe that's where the only profit is. So sometimes, then if you're a busy time, that's first thing you do is make sure you enter at the right price. Either if it's a sell, either at that point or higher. If it's a buy, either at that point or lower. Number one. Number two, the moment you see some profit, close and wait for another one. I mean, this gives you a rest of mind. One, do you get my point now?
Yes, Coach, I do.
See, yeah, progression is very important. It doesn't matter how much you make in a trade. What matters is it progressive. For example, even if others come and say, oh, we made $5,000 from that trade, and you took your $50 in peace. Okay, that's how to deal. One of the things I like about forex trading, it helps you to discipline your emotion. It helps you to look away and focus on all I want is just let me take some of it. It's okay, I don't look back again. I'm not going to be affected. I won't have the fear of missing out. Neither will I have fear of losing. All these things, the moment they go, you have rest of mind. Because, I know I have someone here, maybe or two or three, that anytime they enter a trade, if they make 300, and then I say that this thing will further go to 1,000, say, I'll see you, coach. In fact, and I hate that thing. I hate people coming to tell me. And most times, they ask them, they know. They're on this call now. When they say those things, they will keep chatting, I will not respond. I'll be reading, I will not even respond. Sometimes I will not even read because it has gone. What are you talking about? What has gone? Oh, if I had known, had I known. Okay, what can that do? So you get my point now. So someone who is busy, the best thing for them is what? To take some profit and have the market wait again, take some profit and out, take it out and out. Because sometimes you leave it and it gives about 500 pips, lots of money, and then things can happen in the market and take everything away. That is very painful. You now come to see, oh, this thing actually gave this. For those of you who remember a trade we entered that the broker cheated us, I mean, I was so pained that day. I was angry with MT4 that day. You get what I'm saying? Because I don't know how many of you remember the trade that I set this TP at 1917.16, and this thing, no, 1917.7, and it got to 1970.63, which was supposed to close our trading profit. Guess what happened? It came there, and the broker did not give us because of their spread, and this thing took us to stop loss. Do you see how painful that is? Imagine, and I wasn't there because I left the trade and I was sure it would get to TP. I was sure I left it. Because I do that on that trade I sent to you guys. I always, when I enter it, I don't look at it. My mind is always at rest. I need to eat TP. All I just want to come and see is either one of you already telling me that, oh, TP smashed, or I see it by myself and I write TP smashed. And I got there and I saw this thing taking us to top loss after coming to our TP. So imagine I was there monitoring it. I would have closed it at that 1970 to tell you guys close. But what would I have done? So for busy person, take profit and leave. Come back again, take profit and leave. In a day, you can make 1,000 like that, $20, $20, $50, you can make 1,000. How many 20 do we need to make a 100? Is it not 5? You understand?
So, yes, coach. Yeah, I understand. Well, it looks like most of the time when I try to do that, I see that I'm going at a loss. Sometimes I get so afraid and just close at a very, very small amount because I don't want to come back to an SL. Then I go back to work, then I come back again. So it's just like that. So I don't know.
Okay. Now you need to stop closing at loss. That's the worst thing a trader can do. Any trade you enter, I always tell people, don't close at loss. It isn't so. All you need to do is just zero. So let me tell you, the psychology is this: the moment you enter a trade, you have a stop loss. Make sure you use your risk management. Your stop loss is not taking more than 1% of your account. So if your account is let's say $10,000, you know that this trade is going to take nothing less than $10. Is that 1%? That's 1%, right? No, that's $100. Sorry, $100 is what it will take. Worst case scenario. So what I do is, when I enter a trade, I always assume in my mind, I do a mind surgery, or what do you call it, a mind game. I play a mind game on myself. I see my accounts, I see it at 9,900 already. So I won't break my own heart. You know, is what you don't expect, you don't prepare for. You get what I'm saying? This can happen. So that's how to help yourself psychologically. When you enter a trade, so long as you're using your 1% and it's $10,000, you know it's $100. Worst case scenario is at risk. So you already minus the $100 from your 10,000. Worst case scenario, I'll see 99. Come on, let me go. It's better that way. Because when you keep closing at loss, the trade that you close at loss halfway that I've not gotten to SL is still valid. SL means invalidation. If the trade is still valid, then it goes to profit. So what do you do? I mean, it's not good. So it's not healthy to trade that way, because you keep assuming loss in a setup that's supposed to give you a win. So don't ever close at loss, except the one who gave you the setup. The coach who gave you the setup say, okay, guys, let's close at loss. They must have seen something. Don't leave it at stop loss. That's why the stop loss is there. Practice this and you see that you have the rest of it. But for Nepal, I would advise you, if you're a busy person, just make sure when you see the profit, close it and have the rest of time. When it's at loss, or when it's at not loss, when it's at draw, when it's in drawdown for the meantime, make sure that you consistently be checking your phone, wait till you get some profit, and then you close. But most times, Nepal's trade, they hardly eat stop loss. They hardly. Even my own setup, once in a while, not like every time. So gold is very predictable, but just that it's very volatile. Yeah. Are we good?
Yes, thank you so much, Coach.
You're welcome. Any last? We have 1 minute left. Okay, I'll take one last question. 1 minute left. No question? All right, guys. You can always ask me questions on my WhatsApp and all that. Okay, quickly. Sorry, let me send IG's my name on this Abdulmajid. Yes, all right, guys. I think we'll call it tonight. Tonight. I think it is good. So, guys, tomorrow we'll do the Manara training, okay? And then after that, I think I'll do a 3-day boot camp for you guys on Forex basics that will give you knowledge of support and resistance and all those sorts, which will help you when you take all this trade as well. All right, guys.